The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days, 11 o'clock till noon. 877-927-6648 is the number to call. Love to hear from you. Thank you, Steve, for 2 great hours. You know, we have really terrific programming here at TFNN all day. Every hour you've got someone going through the different chart patterns, the way they study the technique. Straight after me, it'd be Larry Pesavento. Then you've got Daryl Martin, Dave White, you got Tom O'Brien, wraps it up 4 o'clock till 6 o'clock. Man, I tell you, that's a full day. And we've got different educational courses here at TFNN. We've got Andy Hecht coming up. I believe it's this Friday. Should be a fabulous show. He really understands the commodities in the context of which contracts to trade, why, where, all the nitty gritties that are very, very important. That's number one. Number two is, if you go to the front page of TFNN, you will see that I'm having a Master Trader Series, a level 2. This is for those people who've done level 1 either live or you've done it through a webinar, or you've done a couple of my webinars on the different the different ways of using the tools like the MACD, the slow stochastic, or in fact, if you use the Chapman Wave methodology in your trading. And this is just a great bunch of people that come back year after year. Maybe this some of them, maybe it's the 5th year of this level 2 annual get together. And so really, it's here in the Boston area at Babson Executive Conference Center, Wellesley, Mass. Saturday, a week from this Saturday, September the 5th, 8:30 to 4:30. I'm really excited about it, and I'll explain why. I spent a lot of time over the last 6 to 8 months trying to work through the different patterns that have given the best signals for a buy and hold. Right now, we've got a particular a short position that we're holding from just about the top, and it's been going very nicely for quite a while now. And we've had long positions like that as well. And the idea behind this particular review, I call it review and new. So some of the newer techniques, there might be modifications of other techniques, or there could be something quite fresh. I'll be going through those. I'll answer all the questions in your own trading, what works, what doesn't work. So I'm really excited about this. This is one of those times where it's fun because everyone that's involved has been using it, wouldn't continue using it unless they felt that it was a successful methodology. And we can just go into the nitty-gritties. What I find exciting about it for my own purpose is that very, very often there are people within the attendees come in and they impart some knowledge, something that they do that I never even thought of. I never just didn't occur to me. Oh, I thought about it, but never really investigated it. And it's a technique they introduced to us that is additive, because any good technique has to be robust enough that it becomes additive to anything that you are doing. I always like to think that whatever I'm imparting in terms of knowledge comes from all my experience. That's number one. And the number two is that within the context of what I've done with my trading and my teaching and my shows and my newsletter, I've been able to aggregate all these different methodologies that work partially, work very well, or might be the very last thing that kicks it off. Because I'm going to spend a lot of time going from the sell signal to the sell mode, and it's a very important period to be thinking along those lines, because there are a number of sectors that are becoming stocks that are extremely overbought, and you want to know, where do you go from a sell signal? Because sometimes sell signals can hold in a high-level consolidation, This is what the market is doing right now. There's a high-level consolidation, a rotational correction, and that often leads to time and shorting periods that are very expensive because they don't go your way. And you want to know, when is it going to work? When does it work for me? When will everything kick in to give you the sell signal to sell mode? From the buy signal to the buy mode is just a little simpler in the methodology because we use the waveform in terms of the higher peaks. But on the way down, we use the technical underpinnings, chart patterns, and then the lettering on the way down is really more an assessment, a gauge of both speed. For instance, I'll be talking about very quick declines in a single leg or in two legs down, trough A, trough B. What do they mean, and what's the implication? There's a huge implication. So that's what I'll be going through. And if you have any questions, if you feel maybe I'm not quite ready, just give me an email and send me an email, and I'll go through it with you. I'll send you back an email, or you can call me, and we'll discuss it. So let's go through the numbers. The Dow's up 37, was up way more than that earlier on at 16,405. The S&P is up 5 at 1870. The comp index is up only 3 at 4237, but it is up in the IBB, which should start to at least attempt a 5 or a 7-point bounce from this, the 139, 140 level, is attempting it, but boy, it's tough. The selling just comes in. You know, once the institutions, I bet if Tom starts looking at the, goes to his Bloomberg and looks through all the different selling that's going on in the different funds, maybe not just yet, but in about a 3-4 days time, or next week, or the beginning of next month, you will see a lot of funds cleaning up, getting out of fantastic positions, lightening up, or cleaning up. And I'm not sure they're going to get out of everything, but I bet they're taking quite a big chunk out of their big winnings that they've had, huge winnings, and getting ready to put it somewhere else. Now, very often funds don't say, oh, I've just sold 1 million Gilead or Amgen, I'm going to put it all into. They don't do that. They sit there for a moment, they assess, and we'll see where that money is going to go. Yeah, will it go into the cyclicals? Well, there are a couple of cyclicals that have done very, very well. We'll be watching this very closely. In my opening call, in fact, we've tried to keep our short position, the short positions. That would include also the volatility index long position. Hopefully, it'll stay there and be still looking good in a couple of days. We've got some long positions. 2 of them are doing very well. One we just implemented today, and it is it's about down less than a point on a $240 stock. So we'll see what happens. Mostly, I'm also thinking, that raising cash, which we've been doing, it's not a bad thing. So let me run the numbers, continue running the numbers. Gold right now is at down 7 at 1304. That might have been the rally, a little bit of a bounce. I thought it would, that it would tell me a lot today about what happens between gold and the dollar. Dollar is up, let's see, 14 cents at 80.08. Silver is down 14 cents at 1983. You've got bonds up 730 seconds at 133 and 930 seconds. High-grade copper is back under 3 at 2.97. Man, that poor old copper position there. And what else am I missing here? Let me just quickly show you that in the Chapman wave methodology, EUR-USD, that has made that peak E-top at the 1.39, what was it, 1.39660 on the 13th of March, and has pulled back very sharply. Weekly is in a peak E, and it better hold 1.37 on a close on Friday, because that's the 9-period moving average. And leg E in the monthly, I'm going to be watching this real closely, because if it dips back, 1.35 is going to be absolutely imperative to hold in the monthly chart. Let's go to Tom in Dallas. Hey, Tom, how are you?
I'm doing great. How are you doing, Basil?
Very well, thank you.
I wonder, with this pullback, Facebook's down to its channel line. When do you think it might be a good time to get back into it?
You know, there are a couple of things that I'm beginning to think in terms of the big high flyers that just recently made their peak Ds and Es. In this case, FB, Facebook, is at 63.51, down $1.33, made a high on the 11th of March. That's the peak D that we often talk about in the Chapman Wave methodology. And in this particular instance, one of the problems that I've been looking at with Facebook, excuse me, is that when it went to that high on the 11th of March, what I was talking about here on the show is I was a little concerned about the divergence where the price deflected the fast-moving average of the MACD. I don't know if you were able to take my course. I think it was last week on the MACD and the slow stochastic. I discussed that in great detail. What happens when prices deflect from the 9-period moving average, bumping up against the that's the 9-period differential, bumping up against the slow-moving average. And in this case, what happened? It pulled back, and now the MACD is still expanding, and the stochastic's at 11%. But I look at it this way. Under 20% means that you're now in the sell territory. In the teens, it means that you better show strength quickly to go back to the 20% level. Otherwise, it's very easy to slide into the single digits. I would not be surprised if there could be a little bit of a bounce to maybe the 66.31 level. I don't know if it'll even get there, but a bounce towards 65.80 to 66.50 in the next couple of days. But the weekly chart was the one that was making me very concerned. I had a parallel wave count of G/C. If even intra-week, if Facebook touches 62.20 to 61.70, I have to conclude that this is a G. But it's very positive in the monthly chart because it's only in leg C, and a stock like Facebook that has been a leader should certainly make a leg D at some time in the future. So here's my thinking. In terms of would you be looking at a position? Is this, from the tone of your voice, it sounded to me like you were looking at Facebook as a possible starter position that had the potential to go to an intermediate term trade. In other words, that you'd be getting something that represented a pretty decent low, and that if anything, the downside should be limited, but we should see higher highs and higher lows over a period of weeks. Is that kind of what you're thinking?
Yeah, to go back up near the top of the channel.
Yeah, that I thought from the tone of your voice, that's kind of what I thought. I'm going to suggest the exact opposite. I'm going to suggest that any trade you put on, you have to wait a little bit. The market right now is very shaky, very tenuous, because it's rotating through different sectors. Whenever you get a determined pullback from money managers, fund managers, hedge fund managers in the sectors that had worked gloriously for them for 2 years or more, it means that there's going to be some hesitation. That hesitation very often doesn't just immediately switch over to other sectors taking over. It means that people are now being quite cautious. So can I ask you to do this? I would not do anything with Facebook now. If you want to nibble, I'd nibble between 62.50 and 61.70, but I'd just nibble on it. And let's speak again Friday.
Okay.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. And just a real quick thing, just to finish up with the Facebook. One thing that during the break that I was looking at, I think that gap in Facebook is going to be visited at least partially. So when I say nibble, I mean just if there's a pullback and it starts to stabilize in the, just let me give you the exact number there, Tom, in the 60-20 to 61.70 area, I would say that that's a good attempt just to nibble. And if it does bounce and it's able to get to 65, I would just raise the stop on that position. I wouldn't add to it. I think from the weekly chart, there will be a test of the gap, and that gap goes right to down to the 60.17, under 60.17. So I wouldn't want to mess around. It's just a very tight stop and a very small position to get a feeler. Personally, I would just wait. I'd have patience, maybe another week or so. Let's go to Lou in Fairfield, Connecticut. Lou, how are you?
Basil, you taking on these extra programs is totally amazing. I'm out here for you, and I'm listening all the time. You're just terrific.
Oh, thank you, Lou. Thank you. You'd like to look at what?
Well, before we get there, I want to know, in February when I called you last, I told you that the long-term cycle high would end in the second week in March.
Yes.
And it seems to be working out like that. I was wondering if you did any work on that?
I did a chunk of work, and my summation is this. Let me just kind of give you the summation of my thinking and what I'd be looking at, and then I'm going to go through the numbers if you don't mind. My thinking is twofold. One is, if the market did not take the opportunity when the IBB slumped. Let me just go. Oh, no. Did I just knock off that little sticker there? Wait a minute. Let me find the sticker because it's got everything. There it is. Dollar NBI. Is that the one? Dollar NBI. And I'll tell you exactly what I'm looking at. Nope. Dollar NBI. Surely. Oh, dollar NBIX. Dollar NBI.X. Yes. When we were looking at the IBB and this NASDAQ Biotech Index, and that NBI made a peak E-top way back on the, what was that? That was back in February, I think it was. Yeah, it was February the 25th. Well, it's plunged from the this is the index itself, from 2872 to the low recently of 2434. Is that right? Can't be. 2872. Yeah, to 2434. That is a huge plunge. And the S&P and the Dow actually held pretty darn well. That confirmed for me two things. Number one is that my thinking about the volatility index is even more critical than ever before on how I approach it. If the volatility index, which is trading now at 13.87, under 14, could not hold even get to the 19s and hold, it said to me that I have to continue to think of a rotational correction. And that implies that as one sector goes down, so another sector can go up. And that kind of seesaw, like on a swing, like when you go to the park and you got a little swing there and you got a large person sitting on one end and a slim person on the other, the seesaw will obviously pull back and hit the ground with the larger person. But if you have equal weight, it means that as much as you swing, eventually you're going to come back to that equilibrium, like the scales of justice. Well, when you're thinking along those lines, you have to say to yourself, wait a minute, there was the opportunity to plunge. You didn't take it. That's number one. Number two is you've got the Dow since December the 31st with everything that's going on, with some huge moves to the upside and huge moves to the downside. All that's happened is it's stuck in a trading range. Let me just put the chart up right now. Here's the Dow. Made a leg C, but I call it a gray C because it is under the previous peak of peak F at 16,505, and today's high was 16,466. What, 50 points? I mean, that should be easy to clear and make a new recovery high. The all-time high is 16,588. So now I'm going to get to your question. I believe that unless the volatility index, which shows selling, can really bump up high, and bad news, I need to talk about that in a moment. Hey, can you hold on?
Absolutely.
Okay, we got Louis in Fairfield.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks, we're back, and we're on with Lou in Connecticut, and I was talking about the different aspects that I consider to be really, really important in calling market turns. One is that the volatility index has to rally, and if you're going to sustain a down move, you can't be in the 13s or 14s or 15s. The real number has to be somewhere in the 19s, and then once it's stuck in the 20s, this market is done for. I mean the market meaning all the different indexes. That's not the case right now, number one. Number two is bad news. It's not good to get a technical turn, which we've had, without recurrent bad news. And the bad news starts off in the background, then it comes a little bit closer, and then out of the blue becomes foreground, and then you hear it on the news all the time. And then when you hear it every single day, and then when you see the cameras going outside the New York Stock Exchange to take pictures of everybody as the market is plunging, that's the day you get your major upside reversal. Well, we aren't even close to that. So, Lou, I'm going to make it real simple. I'm going to talk about 3 different aspects right now.
Excuse me?
Completely different to what I just spoke about, the volatility index and bad news. And that is, if you get the Dow stocks, if you get stocks like an IBM, which is giving back some today, but if they rotate into the cyclicals and the high techs, if an Intel starts to take off, which is done, it's actually, I've got it in a possible leg F, but it is rallying, and a Cisco which is doing really nicely in a brand new leg B and about to pierce a downtrend line in the weekly. If you rotate into the older Dow, especially the high tech, the old tech stocks that have survived, Microsoft, no matter what you throw at Microsoft, it's a peak E right now, but it has done very well going to recovery highs. That rotation can sustain a market in a sideways pattern. The longer you usurp energy, downside energy, by holding up, the greater you can build up force to break out. But if you go to the hold sideways, and all it is a rotation for the moment, and then suddenly these are the names that start to decline. For instance, if my four horsemen, GE, IBM, MMM, and UTX, go back to the down mode they were in, the down legs that they were having just a short while, a couple of days ago, if that continues, that would say to me the Dow will at some point fail, and it's going to fail in such a way that these are the parameters that I'd look for. So even though in my opening call we do have short positions, I've also mixed it in with long positions. And all I can say to you is a Dow close above the high of 16,505 that was made on the 7th of March would say to me, now there's a chance to try to test the all-time high. But if any point going into Friday or Monday of Friday this week or Monday of next week, if the Dow breaks under 16,318, the 9-period moving average, but especially if it takes out 13,270, all of a sudden I'm saying to myself, fine, we've had the rotation. Now we're going to see whether or not there's an acceleration to the Dow. Where is the VIX at that point? And are we getting bad news? To me, those are the criteria. So I'm looking at stocks that are working. I'm looking at stocks that are lagging. I mean, we have one stock now that we bought just the other day, up a really nice percentage. Actually, two stocks that are up nicely. So that's the only way I can do it at the moment. And one of the reasons is when the IBB cracked, when it really took the biggest beating that it's had, a drubbing in those stocks for the first time in 2 years, that was the deepest decline for some of them. The S&P just a couple of days ago made an all-time high. And not only that, you've got defensive stocks like J&J. So, Lou, what's the question?
Before we get caught off, I just want to say I got Microsoft making new highs. I got the DAX, the CAC, the FTSE coming back from oversold.
Right.
We got window dressing coming in, and I think the market may be doing one of your left-hand extensions.
Yep.
Is that how that works?
Well, in this particular instance, if you're talking about the Dow, it wouldn't be an extension. What would happen is if it broke to a new all-time high, I would then have to say, wait a minute, is the Dow weekly now in leg B and not an F? Because the MACD at that point should be positive in the weekly, and the stochastic should be at 80%. We aren't there yet. So I can only go step by step. But as a presumption that if that were to happen, then I'd have to say, wait a minute, we've recycled and we have to be prepared for higher prices. Does that answer your question?
Yeah, I guess so. I just thought I'd mention to you that those European markets are coming from my indicators. They're way oversold. And as long as they're moving up, we're going to stay solid.
You know, you're right in that aspect, except for one little thing. If we do start to come down, we will probably drag them down as well, and they will stall in their rally. But the Dow, the German, if I've got the right chart up, which is the Dow Jones Germany Stock Index, I don't know where I can't find the futures that I usually look at. That says that if it breaks to a new recovery high above the high of the 24th of January, that would be very positive. So all I can say to you is right now, I don't want to be locked into my thinking. This is the most important period to be as flexible as possible, and we'll see what happens.
Yep, I see the MAC is still too high above the zero line, so I think it's got some time to stay up here, float. You know how you say it floats? That floating thing,
that's right. It's like that balloon that's
thing?
just floating, as the technicals deteriorate, the balloon just stays up, and when the air comes back again to push it higher, it can go even a little bit higher. Yes.
That's what the weekly's doing. See, it's telling you we're going down.
In all time frames, the weeklies have very poor technicals, except that the technicals are very close in the weekly chart of the S&P. The stochastics at 84%. MACD hasn't turned up yet, but it's walking the 9-period moving average. And I actually I've got it as leg B in the weekly chart. I don't see any other way I can count it. And that says that on a very worst case basis, 1737.92 should hold. That's a worst case basis. But all I can say is that I don't see any reason why we couldn't have a 1,000-point decline in the Dow without changing anything really. But I'm going to wait until we get to that particular area of sell signal.
You're terrific, Basil.
Thank you, Lou. Let's see what happens. Thanks so much for calling. And that's a great point that you made, absolutely, with the foreign stocks. Thank you for calling, and we're going to go right on to George in New York. Hi, George. How are you?
Basil, good morning. How are you today?
I'm very well, thank you. How are you doing?
Basil, thanks for the other day, by the way, on PBR.
Yes.
Appreciate the advice. It worked out well thus far.
Oh, great.
Yeah.
And now you'd like to look at?
Now, today is POT. I'd like to add to that, I'm thinking.
You know, I can kick myself for not jumping on this. I picked it up when nobody was even talking about these potash companies or the minerals. Potash Core Saskatchewan, POT is a symbol up 57 cents at 35.49. And the only reason why I love the chart pattern is I saw that there was a chance that if the MACD didn't close decisively lower but was flattening out, you could get a U-shaped pattern. Actually, I saw it even earlier than that, but that's really when I was looking at it on that peak deep pullback, and I thought, oh, man, and then I missed it. And what's happening with a stock like this, it makes stair-step moves. So it goes up, and then it pulls back quite sharply, and then it goes up, and then it goes sideways and pulls back. So if you aren't in it already, it's kind of tough, because the pullback's
I'm in it at 32.37.
That's it. So now what's happening is made the U-shape. The previous high was 35.75. The high today is 35.68, only 9 cents off. And now it's even more important that I look at the weekly chart, and the weekly chart has a peak D, and all it needs to go is a couple of cents higher, and it starts leg E. If potash, and this is really important, if potash is able to get to the 30, it's 35.50 right now. If it can get to the 36.60, then that horrible candle of the 2nd of August, when it went from 38.09 down to 28.55, I mean, 10 points, that's huge. It's filling that in a very steady way. But if it fails to take out the open of that day, which was 37.18, in the next week and a half, then it's probably going to stall. If it closes above that, the 200-period moving average at 38.91 will be the target. I want to just go step by step and say that the monthly chart, and this to me is really important, the monthly chart had a high of 35.52 for leg B, and now 35.73 is a high. So this is a leg C, very quick and a very small in comparative to its usual moves. 3 legs up in the monthly chart, but the MACD and stochastic are improving. That's the reason why, looking out, I still see later on in the year higher prices, even if we get a pullback in the general market, because I think that this represents good action, market action for potash, and in a way, looking out possibly the general market. So I love it. Now, you wanted to add. I would hold off adding for now. Okay. But I would consider that if it closes above 35 round number open on the 6th, 35.73 high. If it closes above 35.73 this week, then next week, if it pulls back and it pulls back to 35.15 to 34.90 and holds, that might be a place that you want to add to it. But I'd have to go step by step. I'd say don't do anything just yet. Let's wait. Today's only Wednesday. Between Friday and Monday, we'll have a lot of information. My guess is by Monday, we'll have a lot of information on whether to add to potash, whether potash is going to go and cover that terrible candle of, where was it that I was looking at on the weekly chart? was that? Let me just go back. Oh, yeah, the terrible candle of the 2nd of August of last year. That's going to be really important. A break above that will say, hey, I'm done with all that other stuff. This is a fresh look at potash, and it should say it wants to push higher. So step by step, but stay in your position, leg D in the daily, about to maybe double top. I want to see how it pulls back and how it holds on a weekly basis, because if on Friday afternoon at 4 o'clock, it really closes up in that, near 36, near 35, what did I say? Yeah, near 36. That'll be very good action.
Okay.
Hope that helps you.
Yeah, appreciate it, Basil.
Thank you very much for
Basil,
calling.
Do you have anybody else on the line?
I do. I
no
do.
problem.
And in fact,
No
you're going to be
problem.
interested in this call. You'll hear it as soon as it comes up.
Wonderful.
Thank you for calling, George. Let's go to
Thanks,
Brent in
Basil.
Martinez, California. Hey, Brent, how are you?
I'm doing just fantastic. Basil, how about you?
I'm doing very well, thank you. I'm feeling good.
Good. Happy to hear that. I had
You'd
a
like to
couple
look
questions
at?
about PBR, which you just mentioned.
Yeah, that's it. So George in New York had spoken about PBR. We did a bunch of work on this. Brent has got PBR, and Brent, the low is 1020 PBR, which is Petróleo Brasileiro ADS, and it's in the petroleum products area. Had a stupendous move going from 1020 to today's high of 12.30. It's trading at 12.13 right now. That means I have to look at the 120-minute chart, which is making an ABC. Oh, boy. Is that an EFG? I'm going to be safe for now. I'm just going to call it a parallel count. My suspicion is it really is a G, but I'm going to go E/A. Oh, where did it go? Capitals. I want not capitals. I want capitals. E/A, F/B, and G/C, but still with very good technicals. MACD is good. Stochastics at 92%. So this is a position play, right?
I actually, I'm in at about 1075.
Right.
I went up to January 2015, $15 calls. This is a longer-term trade for me.
Okay, now if it's, well, so we'll call this a position play rather than a trade. So this is a position play. So because you've got good profits and it is an option and it's further out, that's absolutely no guarantee that when you sell, it's going to be in the money. We just don't know because we have to, time erodes price in options, but it can also expand the price if the price is going higher. There could be an even greater premium than one would expect for a very little outlay in money. So what I'm looking at here is that there should be a pullback, even if there's a slightly higher high, to make leg D in the 120-minute chart. I'm calling it G because this is the thing that we study a lot when I do my Master Trader Series level 1 and 2, but especially 2. What happens, what's the difference between an instant restart going to another D, E, or F, or a parallel wave count after what looks like an instant restart only going to a G? This has all the characteristics of going only to a G and then pulling back, but that's a good sign because the G says, I'm a little extended, but I should pull back, and I think it'll pull back to just under 12, somewhere around the 890 to 1190 to 1180 area. So you know what? If you don't mind, I want to do a little bit more work because I want to make sure that this isn't a single leg A up that's going to pull all the way back. So if you want to hold on through the...
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risks risk of shorting and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. We're back with Brent in Martinez, California. We're looking at PBR, which is Petróleo Brasileiro, and it's trading at $12.14, down 4 cents, having made in the 120-minute chart. I'm calling it a peak G for now. 1205 is the 9-period moving average. That's not really the issue. The issue here is that I suspect right there. Now, why is that changing to a little hand? So that's, I think that the 1190 to 1180 area should be pretty good support. It might come down a tad more than that. But what I'm going to suggest, Brent, is you keep that position for now, and then I would consider, even though it's an option we're talking about, if in fact there is a pullback towards the 1170 to 1160 area, and yet the MACD is still holding well, and the stochastic's not pulling back to more. It's at 94% in the daily. It's not pulling back to more than 92% or 91%. I would recommend that you consider having a shorter term trade on this. And what I would do is I would use those call positions to essentially try to trade it at each higher peak, so that if you buy it there, if it went 1 penny above 1230, peak A, if that becomes peak A, you start to think of exiting as it's rising above, and you just take your profits, and then you wait. And when there's a leg B and maybe a peak B, you try to do the same thing again. And that way you're going to be building up a kitty to allow you to hold the longer term position, even though if there isn't a big move up, and if this PBR replicates the big move it had from the low of the week of the 5th of July of last year, 1203, peak A went all the way to 1476. I want to see as strong a move there because there was a very positive divergence between the stochastic and MACD as the price made a lower price. That to me was really important. So I like your trade. I think it's a position play in the longer term call position. I would think maybe we can look at it again Friday or Monday to see whether or not you could add a trading position to try to work it all the way up if there's going to be a peak A, a peak B, maybe a C, and even a D. So I hope that helps you. A break below 1150, and I'd say, oh, got to be a little careful. I suspect it'll hold the 1170s, 1180 to 1170. Hope that helps you, Brent.
It sure does. Thank you very much, Basil.
And congratulations, you got a great trade there. Thank you, Brent. So the Dow's up 25, S&P's up 3.38. Now all of a sudden we've got the S&P up 18%, and the Dow only up 15.15%. Now let's just go through a couple of things. I'm looking at this and I'm saying, I'm just going to make a quick summation because you got Larry coming up. Larry will have a chunk to say about the markets, I'm sure. So tomorrow I'm going to have a look at some of those commodities. I did Facebook earlier, J&J in the Den. Is this a place to buy? No, I think it needs to test about 1.5 or 2 lower down. I'm thinking that it's just a quick trade on FB. That was in the quick call in the Den. So let me just go through this. The Dow is making a leg C. It's a gray C because it's under the 16,505 high of the 7th of July. That's number one. Number two is the MACD is trying to close positive. That gap between the fast-moving average and the slow-moving average. The stochastic's still very weak. It's only at 59%, but it is rising, and rising is what you want. I'm suspicious of what's going on here. I think there's a lot of resistance. However, I'm not, at this particular point, we have longs, we have shorts. I just have to focus on the levels. And the levels say a close above 16,505 in the next 2-3 days would be positive enough for me to say we could test the all-time high of 16,588. I'm watching the volatility index. Now it's back above 14. A volatility index holding in the 13s is buying pressure. As soon as it moves to the high 14s, the low 15s, it becomes short-term selling pressure. Those are the parameters. And bad news, without bad news, you don't get a bear market. You get a rotational market. That's what we've got. So stay tuned, Larry, and I'll be back tomorrow. Don't
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.